Well, after a volatile year for healthcare stocks in 2025, investors are asking what's next for the sector and where the next source of growth may come from. From biotech and pharma, performance to innovation, M&A, and the emerging role of AI, the landscape is evolving very quickly. Joining us now to break it all down is Jacky He, portfolio manager at TD Asset Management. And Jacky, Happy New Year. Thanks for joining us on the show.
Happy New Year. Thanks very much for having me.
Well, we talk about the healthcare sector in 2025 as a very volatile sector. Why don't you walk us through some of that volatility and what you saw in 2025?
Yeah, completely agreed. Like a year ago when we talked about healthcare, everyone was bearish, right? But if you look at the year, the healthcare sector in the US ended up with 15% return. So as a defensive sector, it's not bad, right? Relative to the broader AI-driven market of 18%. But if you look into that, the more defensive component of that sector, like pharma, as you mentioned, biotech companies, they deliver over 20% returns, right? And they outperform the market. So last year, when we sit down here, when everyone else was getting excited about AI investment, we had to sit down, went through headline risk after headline risk about drug pricing, about FDA changes, about drug tariffs, right? And in the end of the day, all those things were okay because initially, a lot of investors did use pharma and biotech as a source of funding for those AI investments, right? But the inflection happened at the end of September when Pfizer signed their first drug pricing deal with the administration. That set up a good template for the entire industry. So companies now use lower drug pricing and heavy U.S. investment in exchange for tariff relief and also broader access to patients. So net, their fundamentals impact has been less than feared. And also policy clarity alone just allowed the company to more freely allocate their free cash flow again.
Okay, so given that, that look back in 2025, how does that set us up for 2026?
I think the setup currently looks encouraging. And that's particularly for the biotech industry, because when they work, they tend to spill over to the other areas of the healthcare sector. I brought up a chart. What that shows you is a long-term performance for biotech companies relative to the broader market on an equal weight basis. As you can see, for the long term before COVID happened, it used to be a long-term outperformer. But something happened post-COVID that created a sharp drawdown because company had to deal with losing COVID sales, had to deal with higher financing cost. Recently, that peak policy risk just led to some breakout to the upside. Question is, can that continue? Right? I think it's possible. There are multiple drivers if you put your historical lens on. Those drivers are similar to early 2010s. So if you recall, back then, Obamacare was first signed into law in March of 2010 for 2013 implementation. A key policy overhang was removed. Then you look at fundamentals earnings. Earnings just came out from a crisis and started to accelerate, driven by new product cycles. And then you look at the regulation part of view. Those regulators trying to find new ways to expedite the process. Last but not least, capital market. Right? The capital market just amplified whatever I just said, and with lower rates and with higher M&A activities. And then you look back today, there's one additional driver that we didn't have back then. That's AI. I'm not only talking about AI diversification trades will benefit the sector, but also AI contribution to the fundamentals in future years is not fully understood or appreciated by the market yet.
I want to talk a little bit about, you mentioned the new product cycle. Can you elaborate a little bit on that?
Yeah, it's very important for the sector. When you have a new drug, you charge a higher price and keep bringing revenue. I brought a second chart that shows you the R&D as a percentage of sales for the pharma and biotech industry. Historically, that R&D ratio to sales hovering around 15%. That's already higher than the broader market, say 3 to 4%. And in 2023, that number just jumped to 20%. So that means companies are accelerating their late stage pipeline, try to mitigate that losing COVID sales. And today we just start benefiting from those investments. So if you look through those major players, lots going on, right? Like Eli Lilly has their first oral GLP-1 drug coming this year. So next time you see me, you may see a skinnier version. And you got Merck, you got the J&J for a cancer immunology drug, a
Trying to build
Vertex.
those drug pipelines, because that's what people focus on.
Yeah, so there are a lot of new drugs across major players, and those new drugs have a lot of potentials. That's what I'm trying to say.
All right, so we've talked about new product cycle and new drug pipeline. Talk about M&A, because that could be another key driver for the sector. What do you see? What trends do you see there in 2026?
M&A is a very important way for drug makers to fill up their pipeline. That's the most directly faster way to do it. And 2025, we saw increased activity, about $200 billion deal, and some high value deals like $15 billion from J&J, $10 billion from Merck. Those can continue this year, not necessarily from those companies, but what I'm trying to say is both upside and capacity are there. If you look beyond next 5 to 10 years, we are talking about over $200 billion sales today are at risk of losing patent protection. So companies are under pressure to fill up that gap. And lower interest rate, especially in the US, just creating that more financing flexibility. And also don't forget, these companies not only have very strong resilient free cash flow, their balance sheet is also very strong. So that means they can do more of that can unlock another couple $100 billion capacity.
Okay, let's talk a little bit about AI, because we've heard AI being discussed in other sectors, technology sector, for example, even the utility sector, but it hasn't really been talked about much in this sector. Why is that?
Yeah, that's why this sector has been a source of funding for AI investment. AI beneficiary does take longer to reflect, because drug development is a long process and tedious process. A typical drug takes 10 plus years from discovery to commercialization. And then 90% of the drug end up failing during clinical trials, right? And then if you look beyond that, once those benefits start kicking in, it can be very significant. When we think about to value biotech or pharma companies, two key drivers is the probability of their trial success, and also the speed, how fast they can bring those drugs to the market, right? And AI can help with both. So think about the drug before it getting tested on animals or human beings. The scientists have to go through, first identify a targets that link to the disease, and then validate the therapeutic benefits, and you got screen thousands or millions of compounds to find the right ones, and then validate it. So that process takes a very long time, a lot of money. I think that process can be speeded up just because of AI. It's still early, but we have seen evidence on the smaller player side that AI can cut the time for that preclinical process in half with half of the budget.
Now, when you think about valuing these companies, you've got policies, government policies, obviously, when it comes to the pricing of these drugs. You've got government policy in FDA approval. Yeah. How do you think about navigating between policy and fundamentals in 2026 when it comes to these companies that you value? 2025
was a rare year, because when a lot of time companies move together against the same policy highlights. 2026 will be different because we talk about the policy risk has peaked, and investors folks will come back to fundamentals again. That means companies' commercial portfolios, what they have in their pipeline, their clinical trials, their catalysts going forward. We talk about those new launches, and there are also a lot of very important phase 3 trials coming up. So those are also all important and good opportunities to watch for. And also don't underestimate AI. I bring it up again because if you can raise success rate for preclinical and early stage trials, you can bring up like tens of new drugs for the next couple of years, and that means tens of billions of dollars in revenue, right? So it can be very meaningful. It doesn't mean the policy risk, as you mentioned, will go away, especially as we are approaching the U.S. midterm. So the risk will continue, but it may be at a less scale than last year.